Hello friends, this video is dedicated to all the investor who wants to diversify their investment in different areas, and sovereign gold bond is one of them. So let us see what the sovereign gold bond is. It is a kind of bond which is issued by Reserve Bank of India on behalf of Government of India. So you can say this is having almost 100% guarantee of payment. There won't be any default, so government won't make any default of payments. So as already discussed, Reserve Bank of India issued. This can be in the form of electronic form, that is a demat form, or you can have a certificate form. Means when you buy from the bank or post office or stock holding corporation of India, you will get one certificate, so that can be there. Now, why an investor should buy when there are so much avenue of investment? Why an investor should buy sovereign gold bond? Now, let us see why an investor should buy sovereign gold bond. So, sovereign gold bond investor can buy. First of all, there is no storage cost. So, whenever you buy a physical gold, you will have a storage cost. So, there won't be any storage cost in this area, as you can see, and no making charges. So there won't be any making charges, as you can see, no making charges. So as in the normal case of jewelry, you will have a making charges. That making charges will vary from 6 to 10%. So in this case there won't be any making charges, no GST. So in sovereign gold bond, when you are buying, there won't be any GST. Normally GST at the rate of 3% is applicable in case of physical gold or in case of digital gold. So digital gold and physical gold both will have a 3% GST. Now you see that there is a diversification. So if you are investing in debt, equity investment, that is share, and then you can diversify through the gold. In case of crisis, the gold will act as a hedging. Now interest, you will get an interest of 2.5% per annum, which will be paid semi annually or half yearly. So this is another advantage that you will not get in the physical gold or digital gold or even ETF. Now the purity, almost it has a 100% purity. Actually it is a 99.9%. Now the next is it can be kept in demat form. So if you are having a demat account through any brokers or through Zerodha, Grow, or any of the stock broker like ICICI, HDFC, and all other securities. There are so many, Motilal Oswal, many leading stock brokers are having this facility. Then you can keep in the demat form. So that is another option. Now let us see the other aspects. Is there any risk involved in this one? Yes, sovereign gold bond is having a risk. Risk not is of theft or loss of the bond, because it is already kept in the demat form. So there is no loss of the this bond, or you can say that theft. But the point is ki it is linked to the market price. So this bond is linked to the market price. So whenever there is any fluctuation, then the prices of the gold will be decrease or increase based on the fluctuation. If it is increasing, you will get increase. If it is decreasing, it will get decrease. However, number of unit will remain intact. That means if you have purchased 1 gram of gold today, say suppose at the rate of 4,500 rupees, and after 10 days gold price decreased to say suppose 4,350, then prices has decreased definitely, but you will always have a 1 gram of gold. The weight will not decrease. So this is how the concept will work. Now let us see the next. Who is eligible? Am I eligible? The point is individuals, Hindu undivided family, trust, charitable institution, etc. are eligible. Can I open for minor child? Yes, a natural guardian, mother or father can open sovereign gold bond on behalf of their children. From where one can buy? So of course all the bank, nationalized bank or scheduled commercial bank, you can buy, or as highlighted in the Reserve Bank of India site, Stock Holding Corporation of India, designated post office, and of course you can buy through the exchange, that is National Stock Exchange. You can buy through the exchange if you are holding in the demat form. So if you want to buy through the exchange, you need to have a demat account, and from that you can buy or sell. What about KYC? So as you say, know your customer is required. KYC guideline is required as per the laid down procedure of by RBI for the individual. Say suppose if you are individual, you need PAN card, Aadhaar card. You need PAN card and Aadhaar card. Same way, if you are a trust or Hindu and undivided family, accordingly PAN other related document is required. For trust deed is required, and all the relevant document as highlighted by Reserve Bank of India. Now how much one can buy? So of course individual can buy maximum 1 gram, sorry, individual can buy minimum 1 gram and maximum 4 kg, and trust and similar entity can buy 20 kg maximum, and this limit is applicable for one financial year. That means ki April to March, means 1st April to 31st March. This how it works. So for individual or Hindu undivided, minimum 1 gram and maximum 4 kg, and like that. Can every member of my family is eligible to buy in his her name? Yes, it is possible, but subject to the ceiling discussed, like for individual minimum 1 gram and maximum 4 kg, and for trust and other entity maximum 20 kg. But it will be subject for the ceiling limit that already discussed for financial year, say suppose April to March. So this how it works. Now what about the interest? So there will be an interest of 2.5%. 2.5% interest will be given per annum of initial investment. That means suppose you have a 5,000 as an initial investment. So this into 2.5%, that will give you, say suppose this will give you 125 rupees as interest, but this interest will not credited in 1 year directly. It will go in two forms semi-annually. That means 62.5 per half yearly. So every 6 months you will get it. Now interest will be paid half yearly, and last interest will be paid on maturity along with the principal. That means ki suppose you have a 5,000 rupees as a total investment, and last interest is suppose, say suppose it is 62.5. So final amount you will get on maturity is 5062.5. So this will be the final amount it will be given. So in the separate interest will not given in last interest. Now let us see next. Any certificate you will receive? Yes, of course you will certificate receive, that is called certificate of holding, will be issued on the date of issuing of sovereign gold bond. So if you are going to bank, stock holding corporation, post office, you will definitely get certificate. If you are buying through the private bank, many private bank is also giving. If you are buying online, so online certificate also you can get. So that is very easy, or you can directly obtain from Reserve Bank of India by sending the mail to them, provided this mail is given to the application form. Now let us see, how will I know when SGB series will be available? Means SGB series when it is available. So one way you can see RBI site, another way you can see the bank site along with the price. There is another way, that is you can buy through the exchange even if it is not available currently where through bank or post office, because it is issued in the form of tranches. So not every day it is available, but in the exchange it is available, but you need to have a demat account. Without demat account you cannot open it. So you can have a demat account. So many brokers are giving demat account like Zerodha, Upstock, 5paisa, Grow, then all this stock broker like ICICI Security, SDFC Security, and many others are there. You can buy through them. So that much you should ensure that those all are approved through the SEBI. Any investment that you are going to make, that you must ensure that demat account is open through the approved vendor only. Next, how much will I get the redemption? So redemption will be the closing price of gold of 999 priority of 3 business days. Say suppose you are selling on Friday. So previous 3 business days means, and suppose all the previous days are working. So Tuesday, Wednesday and Thursday. These 3 days, say suppose prices is, one day it is 5,000, another day is 4,990, and another is 4,890. So sum all this 5,000 plus 4,990 plus 4,890 divided by 3. This will the average value, whatever the average value will come, that will give you the exact redemption value. So this is how it works. Now how to redeem? How will you redeem it? So investor will get an intimation 1 month before maturity. So 1 month before maturity, you will get an intimation that your bond is getting matured, and you will not to do anything. If you have not changed the bank account number or any IFSC security is not changed, after maturity it will be automatically credited to your account. Post maturity it will automatically credited to accounts. So it's simple. If you have changed it, any account number, then please intimate to bank. Now what is the bond tenure? The tenure of the bond is 8 years. So 8 years is the tenure. However, if you want to withdraw prematurely, you can withdraw after 5 years by selling to the Reserve Bank of India or through the bank. Premature encashment and redemption of the bond post 5th year from the date of issue. Now what about the tax treatment? Now the point is, if you are going to sell any security, the taxation concept will work, and which is in the form of short term capital gain and long term capital gain. So if you are selling before 3 years, then short term capital gain will come into the picture, and if you are selling after 3 years, the long term capital gain will come into the picture. So the tax will be, in case of short term, the whatever the gain you will get, that will be added to the total income, and the taxation will be according to the prevailing slab. That means, suppose you are in the 10% bracket, and you get before 3 years you are selling it. So suppose you are getting a gain of, say suppose 1 lakh rupees. So 10% of this will get. But in case of long term capital gain tax, suppose you are selling after 3 years, then you will get a benefit of indexation. So this is how it works. So capital gain tax will be applicable both in short term and long term. What about nomination facility? Nomination facility is available. It is available, and on the death of the investor, nominee may approach to the respective office for the settlement. So if you are buying from the bank or whether online, you should definitely put the nominee, so that you should not face the problem later stage. Even after your death, your family or legal hire should be able to get the money back. Will I get any loan? Yes, you will get a loan subject to loan to value ratio. So loan to value ratio, that means ki generally 75% loan is given. So suppose you have a 100 rupees value of the gold, then you will get 75 rupees as loan. So 75% will be there. So mode of payment, you can buy through cash or through check, DD, or through account or NEFT. Or another way is if you are already having internet banking or respective some bank offer this in the even in their apps. So internet banking or their apps, you can buy and you will get definitely 50 rupees per gram as a concession. So if suppose gold price is 5,000, then online you will get 4950. However, if you are going personally to the bank and filling the form and trying to get this bond, then you have to pay this full amount. This amount will be only available if you are buying online. This is the way the government of India is promoting the digital payment. Now, is bond is tradable on the exchange? Yes, it is tradable on the exchange, provided you must have a demat form. Demat account you must have a, then only you can get this on the exchange. That means so many accounts are there: Zerodha, Grow, Upstock, 5paisa, and then other stockbroker HDFC, then ICICI, Motilal Oswal. So many are there. All check this for that whether they are approved or not. Based on that, you can buy it. So this is the way you can buy or sell this bond. So provided should be in the demat form. And in the bank, if you are going to purchase through the bank, then you must give the DPID and client ID. Whenever you make a demat account or whenever you have a demat account, the two ID will be there, DPID and client ID. So when you are filling the form in the bank to purchase the sovereign gold bond through the bank by physical visit, then you must fill the form with the DPID and client ID. And if you are buying through the internet banking or their apps, there also you have a provision of DPID and client ID. If you want to keep in the demat form, don't forget to put DPID and client ID in the respective forms. So this will help you to prevent any loss of the certificate. Any discount will you get? As already said, 50 gram you get discount if you are buying online, but this is only available through the bank or Stock Holding Corporation of India or post office. If they are giving the facility, then 50 per gram you will get the facility. But you will not get this facility if you are buying through the exchange. So if you are buying through the exchange, like if you are already having demat account and trying to buy through the exchange, then you will not get this facility of 50 per gram. How to buy through the exchange? As already discussed, you will get only this through the demat account. So if you are holding a demat account, then you can get this easily. Now let us have a small comparison of all form of gold which is available in the form of investment, so that we can know which is the wise decision to invest. But the important thing is, sovereign gold bond cannot replace the physical gold. If you are intended for the wearing the jewelry, then sovereign gold bond you cannot wear as a jewelry, of course. So let us see the four comparison. The purity, in all the cases almost the purity is high except the physical gold. where you need to be very careful when you are buying the physical gold. If it is a coin and if you are getting a certificate from the bank, then there is no problem. However, if you are buying through the jewelry, then you must ensure that you get the proper bill along with the GST, and as well as you should see the hallmark. Then safety, then of course very high degree of safety is there in all these three bonds, and risk of theft or loss will be there in physical gold. Return will be higher in sovereign bond. The only reason behind it is because the 2.5% simple interest that you are getting on the per annum of the sovereign gold bond is making it attractive. Now ETF won't be having such higher return, and digital gold same. All these are in the prevailing market, and the physical gold will have a lower than market price because it is having a, because no jewelry can be made with the 24% 24 karat pure gold. So that is the reason you will have a lesser value. Loan possible? Yes, loan is possible in sovereign gold bond, but it is not possible in ETF or digital gold. So you will get in sovereign gold bond, but not possible in digital gold. Now, what about the capital gain tax? No capital gain tax will be there if you are held till maturity. That means if the bond is held till 8 years, so no capital gain tax will be there. But if the bond is held less than 8 years, then you will have to pay the capital gain tax. And as already discussed, the short term and long term will come into the picture. So this is how it works. Now ETF, the same concept will apply. You have to pay the capital gain tax whether you held for 8 years or not. It does not matter. Same way digital gold and same way physical gold. Storage making charges, GST, no storage charges. Sovereign gold bond, no making charges, no GST. ETF same way, no storage charges, no making charges, no GST. But in digital gold you will have to pay GST as well as some charges will be there, as they are keeping the gold in the physical form in the locker. So you have to pay some charges. That there is no separate you will not get that how much you are they are charging for you in the form of gold. So physical gold, you will, yes, you have to buy a locker to keep in the safe place. So local cost will be there, and then making charges will be there, and then of course 3% GST will be there. Trading on exchange, yes, it is possible to do the trading on exchange. ETF, yes, it is possible. Digital gold you cannot do it. Physical gold you cannot do it. Online discount on buying, yes, 50 per gram you will get online discount. ETF, no online discount. Physical gold, no online discount. Physical gold, no discount. In digital gold, some sites like Amazon or Google Pay, time to time they offer that 1-2% cashback like that, or Phone Pay. So you may get that one. And MMTC and so many reputed company are there in the digital gold. And in digital gold you can buy more compared to the sovereign gold in terms of quantity. And ease of liquidity means, suppose if you want to sell in case of emergency, then in that situation digital gold is very easy, ETF is also easy, and physical gold is easy. But sovereign gold are very difficult, because if you are trying to sell through the exchange, then may not be possible. The buyer may not be available. It is only possible when you have a sufficient buyer, then you can get it. But however, in normal route, if the sovereign gold bond is not in the demat form, then you cannot sell before 5 years. That is also another drawback. And digital gold, the biggest advantage of the digital gold is, at any point of time, even 24/7, at any point of time you can sell the digital gold. But ETF can be only sold in the exchange working hour. And same way physical gold, in the night, late night, no jewelry shop can be opened. So in such cases digital gold is the best option. So based on the above all this comparison, it is up to you to decide which mode is good for you in the form of investment. Of course, no digital gold can replace the physical gold charm. The reason is, because you cannot wear the digital gold in the form of jewelry. You can only the physical gold can give you such a effect. So of course digital gold has its own importance and physical gold has its own importance. So both are independent to each other and both have their own importance. So based on your requirement, your investment angle, you decide which way you want to go. So this is how this concept works. So now let us see one more thing that I have done one for you. This is a calculation for you how the charges works. So I'm going to show you. So if you are buying a physical gold, say suppose physical gold 1 gram physical gold is having a price of 4,600. Okay, so 4,600 for all this. Now making charges roughly around 6 to 12%. I have considered 6%, so 4,600 into 6%, 276. In digital gold no making charges, ETF no making charges, sovereign gold bond no making charges. GST, of course, the sum of these two and then 3%. So 4,876, then we applied GST and then GST at 3%. So this GST at 3%, then what will be the total cost? Then this is your total cost after considering GST. So this is your total cost. So this is how it works. Now let us see the next. So total cost will comes out to be for 1 gram buying of the gold will be 5,022. Here again 3% GST will be there. So same way. So 4,600 and then into 3%, the total cost will come out to be 1.03. The total cost comes out to be 4738. So this how this works. 4738. And in case of ETF, no GST, sovereign gold bond no GST. Locker, of course, for physical gold you have to pay at least 800 to 1,000 rupees locker charges per year. Same way digital gold is also charging some charges that you may not be able to know it how much they are charging, but it will adjusted in nearly around, it will hardly take 20 to 50 or maybe some 100 rupees will be like that. And digital and ETF there won't be any charges, and in sovereign gold bond there won't be locker charges. Interest, of course, none of the physical gold, digital gold or ETF will offer you the interest except sovereign gold bond, that will give you 2.5% of this buying amount. And the total cost, now you see here the difference. If your angle is of pure investment, not the having a form of the jewelry, wearing a jewelry, then see the physical gold option won't be a good choice, because see 1 gram of physical gold will approximately cost you 6,000 rupees, and digital gold will of course having 4,700 to 4,800. ETF will be also having the 4,600. But you see the sovereign gold bond how beautiful it is. If you are having a planning of investment, that 4,485 rupees. So it is the least among all the possible modes of investment that is available in the form of gold. So guys, I hope you understood the concept of sovereign gold bond and you will make a right decision in the form of investment. So I am very thankful to you for all this, and if you have any doubt, so do let me know in the comment section. I will be waiting for your comment. Thank you very much. Take care of yourself and always consult your financial advisor before investing in any mode where the risk is involved, and this will help you to mitigate the risk. This video is only made for the educational purpose and it does not bear any financial advice. So please ensure that there should be a complete discussion with the financial advisor before making any investment. So do discuss with the financial advisor before making any investments. So till then, goodbye. Take care.